you can see now that the process of determining what to buy is data gathering, data analysis, and filtering the information. That gives us a list of companies that right now are in the right, call it sweet spot for us to make an investment and have some assurance that they're going to be around in the near term. The next part is when. When do we invest in a company? If we have a list of companies that are, call it fundamentally good, now is the when. The when is based on algorithms that determine whether or not this stock is trading at a level that we should get into it. The algorithm includes the number or the element I indicated earlier called the buy limit. The buy limit is that factor that says, okay, we want to be near the buy limit when we invest in this company, but we also need to have a more comfortable feeling that the stock price is moving in our direction. It's moving in a direction for us to be successful. So that takes some period of time. The process and the algorithms I put together, do use, I'll call it the 50-day moving average, and use the last 50 days as a key element, okay, of determining where this stock is going. I've come up with a number of formulas that look at the trend in the stock. For example, for something to be in a buy situation, it's important that we look at the last 3 trading days. Is the stock price up, 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 or is it down, down, down? We like to see the prices moving up in a short period of time. And that factors into when we say it's time to send out the buy alert. So the when is based on, again, a set of mathematics based on stock history, what's happened in the stock over the short term and the long term. It's a combination of both. Looking at the probability of this stock achieving a certain price in the near future, because that is the name of the game. We want to buy something that's going to hold its stock price, not going to deteriorate significantly. We don't control the market, so it's going to go up and down, but we want to make sure it doesn't go down a lot. We don't need it to go up a lot. What we need the stock price to do is to be stable over the next period of time when we're going to make the investment, because we're basically going into the options market. I want a stock price that doesn't fluctuate, or I get hit with a surprise that goes down 10%, 20% tomorrow. So if we understand that we've got good fundamental principles in the what, and the when says it is time to buy, then we should be on the right side of the I'll call it the trade that gives us a high success rate. Because with those factors now, we've done away with a lot of noise, we've done away with a lot, let's call it emotion. And that's the other thing. These, I'll call it algorithms, don't have any emotion. The key is a lot of times people get emotionally tied to their stock positions. They say, well, I'm never ever going to sell Apple. Well, that's fine, okay? But look at what is the opportunity you're leaving on the table. The Apple stock price has gone up and down, and if you did buy it